Okay, it's Monday. Stock market opens in about 1 hour from now, the New York stock market. It is Monday, August 29th, 2016. So we're going to pick up where we left off over the weekend. Now, when the market closed for trading on Friday, I sent out a video and then I sent out another one over the weekend. And in those videos, I was talking about the breakouts that developed, the trades that we had opened, what we were anticipating doing when the market opened, because we did have a few positions open through the weekend. Let me show you how those turned out. This is the one that I was primarily talking about in the first update video on Friday or Saturday. And if by the way you watch those videos, you should probably be up approximately, let me see what the total was. If you watch the first video, you'd be up approximately 130 pips right now. And then if you watch the second video, you could have closed all of the other positions with the other trades that I'm going to show you in just a few moments that developed as a result of the continuation breakout trades. There's one that actually set up on the euro yen after the market opened for trading. So I'll walk you through the whole thing right now in these videos, what we did. So you should have been up over 130 pips based on just if you watched the first video on Friday that I sent out when the market was closed. Actually, you probably could have received it Saturday morning, depending on where you live. And you could have executed the trades when the market opened for trading yesterday or this morning, last night. For me, it's last night. I live in California, so when the market opens for trading for the start of the new day, or sorry, for the start of the new week, it's Sunday in the afternoon for me. Again, if you're in Australia, you could have picked up some of these trades, and at this point right now, though, you would be up over 130 pips just on those trades if you would have executed it, because there was plenty of time to get into these trades afterwards. But again, I'll show you exactly what we did here. This was the euro dollar. And I had mentioned at the time, I believe the market had closed on this one and price was sitting right at 1191. And then I talked about the possibility of a pullback. Now, when the pullback occurs, sometimes it depends on how deep it is. Sometimes it'll go back and retest the level that it broke out of. Sometimes, in this instance, it won't, but there'll just be a slight pullback. And this one went just above the psychological level. So it went back up to about 1207 and then dropped, and it took a few hours. So we just left it alone, and we left our take profit level as it stood at the time when the market closed. So this paid 55 pips. So you can see where this is sitting. This just closed in just the last few minutes. So this paid 55 pips. Now, one of the other trades that I also pointed out was here on the pound dollar, that the pound dollar at the time that I was making the video, the first video, the update video, when the market was already closed, the entry was here at 31.32, and price was sitting here on the close there at, I'm sorry about that, it was sitting there at 23. Now, there was another retracement. Very often, if you miss the entry, you can wait for a retracement, and this retracement went all the way back up to, let me get that price right there, it went up to 38. So it went back up above the 32 entry to 38, so you could have gotten into this trade if you would have watched this video. And again, just in the last hour or so, this one has hit its 55 pip take profit target. So as a result of all of the trades that we executed after FOMC, well, I call it FOMC, it was because it was Janet Yellen. She was really in Jackson Hole, Wyoming, if for those of you who weren't aware of what was really going on. There was a statement that the market was waiting for her to make and present to the markets. It was, we were waiting. It was almost like an FOMC statement, one of those events. It just happened to be at that Jackson Hole symposium that they have every year. It's been going on. I think initially it started back in 1979, and it really wasn't what it is today when they used to meet. And actually, I don't think it was at the same location, but it's been going on for many, many years. Every summer, we, and then a couple of times during the year, we wait for these events to come out of that area, that particular event. But when Janet Yellen had released her statement, it caused that initial reaction. If you didn't trade it, I'm just sort of rewinding and sort of going back to that moment when it created that actual spike candle. So if you missed that Friday, that's exactly what it was caused from. It was her initial headline statement and then the following comments in the statement later on that caused a lot of that reaction, the up and down movement that we saw. So it was just a matter of waiting for the actual breakouts, because for most of last week, I kept talking about in the update videos that this was that range of consolidation, and we're just going to have to wait for the 1 hour candle to break out of that range. And that's what we did for the most part. You can see back over here to the euro dollar. This is the euro dollar 1 hour chart. It moved around a little bit more than some of the others. For example, and then there's the other one that I'll show you in just a minute, the euro yen that we've been waiting for that one to break out of consolidation for a long time, about 2.5, almost 3 weeks now. But I'll show you that in just a moment. But you can see the activity here. Once it finally found that support level in the middle of the week last week, it then created that continuation signal candle after her comments, after her statement. So I like to mark off the start of the new week with these dotted lines right here. That's the close of the previous week, and here's the open. So this one, again, paid 55 pips, and then the pound dollar, you could have easily taken that one after I made the video, after I showed you exactly what to do with it. By the way, we also have the webinar videos on the website where I break down in detail exactly what all of these 3 indicators are that I use, how to get into the trade, how to confirm it, how to identify the correct ranges of consolidation. And then it is a more, I think to some people, it's a more advanced strategy because you're really having to watch economic data very often, and I say this all the time with the continuation breakout trades, is that economic data is usually what causes these breakouts. Economic data, statements from a Fed official or a bank official or a politician, something like that. The continuation breakout trade even set up back in February when Boris Johnson made the comment long before Brexit decision was actually announced. And he created that one gap to the downside. You might remember that on the pound dollar where it just kept going and going and going for about 2 or 3 weeks. A lot of people were fighting that, and they kept trying to trade it back up to fill that gap after the market opened. But he made a comment over the weekend, Boris Johnson did, and it caused the pound dollar to drop and gap and just keep moving. It just kept dropping lower and lower. That caused a continuation breakout trade for us, and we traded that, and we kept trading continuation breakout trades in that down direction until it finally bottomed out. So that's what causes a lot of these continuation breakout trades, and it's a really effective technique to use. First of all, you're going to make quite a bit of money. On the majors, we earn 55 pips on these trades. And as a result of doing this, the total profitability in all of these trades since Janet Yellens' comment on Friday, and it's Monday now, and the stock market hasn't even opened in the United States. As a result of that, we've earned 340 pips as a result of all of these trades that we've executed. So we, again, started off here, well, we ended here with the euro dollar 55 pips. One of the videos the first video that I showed you. I also showed you in that video that we had executed a trade here on the dollar yen, and this all set up on Friday after her comments, but this one moved a lot faster. I talk about very often that the dollar yen is hypersensitive to U.S. economic data. And very often, when some of the others are a little bit slower in hitting their targets, this one will move a lot quicker in many cases. There was also, part of the reason was that there was a lot of anticipation about what was going to happen with the yen anyway. One of the Japanese officials was there in Jackson Hole. So the markets were also waiting to see what his outcome or what his decision or his comments were going to be. So it doesn't really surprise me that we saw this one move a little bit faster, but this one hit its 55 pip target before the close of Friday. Here's the close on Friday right there. So this one had already hit its final target, 55 pips here, as opposed to what we saw here holding through the weekend on the euro dollar. And then the pound dollar ended up moving and hitting its 55 pip take profit target. Remember, when the market closed, it gave you an opportunity after when the market opened. When the market closed, we were able to identify the breakout and everything looked perfect here. We just had to wait, or you could have waited for the entry and then take profits at the 55 pip take profit level. The other trade that I showed you also paid was this one here on the dollar Swiss. This one paid 55 pips on the dollar Swiss. Again, another continuation breakout trade. Some of the other currency pairs that we were also watching was this one here. This was the pound yen. Now, the pound yen, when this one set up, had some divergence in it. And the other issue, now I want to share with you some of the tips about using these techniques, is that when I see a continuation breakout trade, I'm asking myself, first of all, what caused the breakout? And can I confirm with the news or the statement, whatever the reason is that causes the breakout, can I confirm to make sure that I'm going to be trading it in the right direction? The other thing I ask myself is this continuation breakout trade right here one of the first ones? Or were there other previous continuation breakout trades that set up, and could I be trading this into the last take profit level based on previous continuation breakout trades? So what I'm going to do is tighten up the charts here and show you that this has been going on for quite some time. There was a breakout all the way back over here from August 16th. This is the 1 hour chart for the pound yen. So there were several continuation breakout trades that kept placing or firing off signals prior to the one that set up on Friday. So when we see multiple continuation breakout trades, we have to identify where is the target based on the first continuation breakout trade, and then we need to slow down once it starts to approach some of those targets. These are Fibonacci extensions. So when we get into the other trade, the last trade that we saw here, we can't expect it to continue to go another 100 or 250 pips when there has already been previous continuation breakout trades. It's eventually going to run into the end of that trend is what I'm getting at. And you can clearly see it here based on the previous continuation breakout trades over there to the left. These are the extension targets. These are the targets based on the previous continuation breakout trades. So we trade it here to a psychological level. Either the 00, or if it looks like it's got more strength in it, we just let it go and we trade it to another psychological level. Psychological levels for me are the 00, the 20, the 80, or the 50. So this one here, we earned approximately 50 pips on this trade here, the pound yen. Again, trading it to a psychological level. Now, the euro yen was a little bit interesting because it didn't print a continuation breakout trade above that resistance until this week, until the start of this new week. It didn't happen last week after FOMC. Let me open up the charts here, and you can see how it was holding below this resistance point when the market closed. It wasn't until after when the market closed for, or I'm sorry, open for trading. So again, with this one, same situation as with the pound yen. There have been previous moves to the upside, and we have to trade this to psychological levels. That's the way I trade it. When I expect that it's going to run into major resistance, and I can see it on the larger time frames like the 4 hour or the daily, I'm going to trade it to a psychological level. So in this trade right here, euro yen, we can't expect it to run another 100 to 150 pips. We have to lock in profits, and we earned 30 pips here. Now let me show you a few other trades that it did the exact same thing here. This was the Australian dollar. Again, when there is either some divergence or you can see that there were previous multiple continuation breakout trades in this trend direction, we have to scale out. Now, this one's a little bit different than the pound yen. The pound yen and the euro yen can cover a greater distance. When we're trading the smaller pair, the ones that move a little bit shorter distances, like the majors, like the euro dollar, pound dollar, dollar yen, dollar Swiss, those are 55 pip take profit targets. And if we anticipate that it might not reach that 55 pip take profit target, then we trade it to the first 20 pips, and then we set the second half of our open position at a break-even stop, and then the second half would then, if it reaches its final target, then it would earn and pay approximately 55 pips. But you can see what we're doing here with the entry of 70. The first take profit level, if we're not too sure that it has the momentum to continue lower, then we'll take the first 20 pips. So far we've already earned 20 pips on this trade. Then we set it at a break-even stop, and it's only gone back up as high as 60. Our entry was 70, so you can see that it has not hit the break-even stop. So if the second half of this position that we have open, we've already locked in profits here at 50, earning approximately 20 pips. But if the second half continues lower, that's our final take profit target here on the Australian dollar at 75.15. And the second half of this position will pay a total of 55 pips. And then, of course, the same thing, we did the exact same thing here with the dollar Canadian. The dollar Canadian, again, with an entry, taking profits at the first 20 pips if there's some divergence or if it looks like it doesn't have the strength to continue much higher. This one is reacting a little bit different than, for example, the dollar yen as a result of Janet Yellen. I keep calling it FOMC, but it was like an FOMC event is why I keep calling it that. So again, we lock in profits at the first 20 pips on some of these majors or the commodity currencies like the Australian dollar, dollar Canadian. Again, locking in the first 20 pips and then setting the second half of the position at a break-even stop. Now, this one came really close to stopping us out at the break-even stop, but it's still in play, and it may move back up here to that final target at 1.3045. So we've already earned 20 pips on this trade. So this one paid us approximately 20 pips so far. We've already locked in the profits there. This is the dollar Canadian. Australian dollar, we've already earned 20 pips. And again, if it pops back up and stops us out at break even, then we still lock in and we've already earned the 20 pips here. We earned 30 pips on the euro yen, trading it to psychological level. 50 pips here on the pound yen, trading it to that psychological level. And then 55 pips here on the euro dollar. 55 pips here on the dollar yen. 55 pips on the dollar Swiss. And 55 pips here on the pound dollar. So again, even if you didn't execute all these trades just like we did, as a result of watching the video, if you would have just followed the instruction there with the also following some of the learning lessons on how to execute this continuation breakout trade, you'd be up over 130 pips just watching the video from Friday and Saturday. But if you were using the trade copier, you would have got all these trades. And that's one of the advantages to using the trade copier is that even if you feel that you can't do this yet, you're not ready to do it, you're not ready to execute it on your own, use the trade copier. I will be executing the trade for you. You'll get the results that I get. And then as you continue on making profits in your trading account, as a result of using the trade copier, you can learn how to use these strategies on your own. I include my entire membership course as a bonus with your subscription to use the trade copier. And when you use the trade copier, again, I'll be executing these trades for you, so you don't even have to execute a trade. And you can learn on your own time how to execute these eventually on your own. One of the things, though, I want to point out is that the continuation breakout trade, as effective and as profitable as it is, it does not set up every day. Throughout last week, there were a couple of times, a couple of different trading sessions, I received emails and people were saying, why aren't you taking any trades? Why aren't you taking any trades? And during the week, I kept saying that, we're waiting for Janet Yellen's statement. You might remember if you turned on Bloomberg or CNBC, I remember hearing Bloomberg a couple of times on Thursday and Friday leading into Janet Yellen, before she even made her speech, her statement, they kept saying how the markets were flat. If you look at a chart and you don't see me executing any trades, then you can clearly see there's ranges of consolidation. There's a reason why price moves inside of consolidation. Sometimes people are new at trading and they don't know how to identify why or what it's doing. They don't know that it's in consolidation. They don't know that there really aren't any safe trades. So what I'm getting at is that sometimes these trades don't set up every trading session. Sometimes I have to wait a few days for them to set up. But you can see just how clearly profitable it is to sometimes wait for your trade to come to you. Wait for the trade to come to you, execute the way you're supposed to, and you're going to get opportunities just like this. It's just a matter of waiting for it. Throughout most of the week, it was pretty choppy leading into Janet Yellen's statement on Friday. It was pretty choppy. So the choice is to, take the risk and take the chances to get some of these small profits, or just stay out altogether and then wait for the actual event that's going to cause it. You can see that there's going to be some of these events just by simply looking at the economic calendar. Very often, these continuation breakout trades will develop as a result of just economic data, so very often during the New York trading session. That is one of my favorite times to execute these trades. So there are times when, let's say, for example, during the London session, I might see, a signal after UK economic data, and it might run up for 30 minutes and then stall. And then it goes sideways until the New York trading session. And then when the New York trading session comes online and we get more participation, more traders available there, and then some economic data at about 8:30 New York time, then we see a breakout. Now, I'm not saying that it happens like that every day. I'm just saying that it happens like that very often. And I like to trade it like that because very often, when in a normal situation, a normal trading environment, when the continuation breakout trade develops, it will hit its target within 2 to 3 hours, very often. Not all the time. Sometimes it'll take holding over the weekend. Sometimes it'll take 8 hours. Sometimes it'll take 12 hours. What I want you to know is that with this technique, or just about any other technique, it's not always going to do the exact same thing every single time. And that's the challenge, is to just wait for these opportunities. So, if we don't have a trade Thursday or Friday, that's fine. Then we don't have any trades. We don't make any money. We just simply wait for these opportunities. And you can see 320 pips. 340 pips as a result of waiting for these continuation breakout trades to develop after Janet Yellen's speech. These were safe. These were reliable. None of them were stopped out. 340 pips total from Friday up until now, and the stock market's not even open yet for Monday trading in the United States. So it's a highly effective trading strategy, and I will continue to look for more continuation breakout trades. So your next question might be, okay, well, when are you going to get your next continuation breakout trade? What do you do? So at this point, I do nothing. I wait for price to settle and then find some kind of a support range, a low that I can confirm, and then wait for that consolidation. Now, in the videos and when I teach you in the membership area to how to use this continuation breakout trade, it's important that you know how to identify and qualify so that you can confirm consolidation. There's a specific number of hours that needs to be in place to confirm consolidation, and there's also specific ranges from the high to the low of consolidation, that resistance and support. It needs to be a certain range. If it's too small, then it generally leads to head fakes. So there's a few things to consider. And again, if you're afraid to execute the trade, but you want to get these advantages, the advantage of getting these trades into your account, use the trade copier. Using the trade copier, I'll be executing these trades for you. So please remember, if you're due diligence, you're trying to learn to make sure that you want to use this trade copier so that you can get these trades into your account, understand that we don't see continuation breakout trades every day. Sometimes we could see them maybe one particular currency pair is trending, and we might see it on a Monday, and then we see it again on a Tuesday, and then maybe even on Wednesday. It does happen every once in a while, but you have to be careful with it, and you have to be prepared for the possibility of no trades during certain sessions, because the market's waiting for whatever it is, whatever that catalyst is that causes the breakout. So thanks for watching this video. I hope you made a lot of money with these continuation breakout trades. This is actually the first technique that I developed in my system. I created this trading system on my own. I started trading in 2001, and this was the first technique that I developed. It was just basically what I was doing, and I'll give you a little history on what I was doing when I first put this method together. I was trying to trade breakouts with John Bollinger's Bollinger Bands. And you'll notice that how choppy the Bollinger Bands are. They're really not creating the range of consolidation the way I like to see it. I prefer to see it more boxed in, I refer to it. So it's more, I've got a solid high and a low. It's a sideways rectangle. There's no mistaking that this is consolidation. When I was trying to trade the breakouts, when they would break out of the Bollinger Bands, they're sort of choppy, and they're not really creating the structure that I needed, that I like to see. So I was still finding some of the trades. I was listening to John Bollinger's instructions, and I just couldn't make it work. They were still failing. I was still getting into head fakes. So by simply identifying the highs and the lows and qualifying and quantifying consolidation, waiting for economic data, and then making sure that consolidation was a specific number of hours, that's another thing you got to remember. That's what helped me identify when the actual breakout occurred. And then over and over again, this technique is profitable 95% of the time if you do it correctly. And I also have some tips that I teach you in the membership area that will prevent you from getting into a head fake, because every once in a while it could cause a head fake. And I have some tips that will teach you how to not get into those head fakes, anticipating that it's going to continue to break out that way when sometimes it turns around and goes back inside a consolidation. So I show you how to avoid getting into those trades. So a total of 340 pips with these trades, these continuation breakout trades. And again, if you want to get these trades, get the trade copier, set it up in your MetaTrader platform, and these trades will be executed automatically without you having to do anything into your trading account.